Hi class, this video is going to run through exercise 17.6, which explains how to complete the disposal of a non-current asset that involves a trade-in that is financed by a loan. So there's a lot going on, and if you're going to complete this with me, I recommend you open up your textbook to page 336 and the workbook to page 308. Like all of these questions, I really recommend that we read it from start to finish before we start to attack it. Let's have a look at it. The following accounts were found on the general ledger of Port Melbourne Import and Export. They have a photocopier and they bought this on the 31st of August for $32,000. So there is a balance, they didn't buy it, but the balance of the photocopier, the historical cost was $32,000. And there is $14,000 of accumulated depreciation also by the 31st of August. So the carrying value of the photocopier is $32,000 minus 14, which is $18,000. On the 31st of August, the photocopier is traded in for a new model. As soon as you see the word trade in, you know you've got a disposal and a trade in to think about. The trade in allowance was $16,500 towards the cost of the new photocopier, which was $35,000 plus GST of $35,500. And the owner has decided, given they don't have a lot of money, to borrow the required amount of funds from EZ Finance Company to pay for the rest. This loan is approved on the 31st and the funds are transferred. So we've got a lot of information to work through, but we've got enough information to work through. We know to record this, and part A gets us to complete the general journal entries necessarily to record the disposal. And part B gets us to consider how we're going to record the actual purchase and loan from EZ Finance. So there's a lot going on. But if we think this through with all of these questions, I always recommend that you work out the result beforehand. And then you've got something that you know you're working towards. We know that the carrying value, and I'll change this to blue, that the carrying value of this photocopier is 32,000 minus 14,000, and that equals $18,000. How much value did we get from this photocopier when we traded it in? 16,500. So the trade-in value equals 16,500. So did we make a loss or profit? We clearly made a loss of $18,000, what we thought it was worth, minus the 16,500 that we made. So we made a loss of $1,500. And that is ultimately the solution we're trying to get to. What do we have to do? We have to do a lot of steps to get to that. 4 steps to remove the old photocopier, 2 steps to record the new purchase and loan. What are our steps to remove the old photocopier? We are going to consider the historical cost, so H, the accumulated depreciation, the A, the proceeds, the trade-in, and whether we made a profit or loss. And we know from this example, because we've already worked it out, we have made a loss. And that's what we're going to work through over the course of the next 10 minutes. We need to transfer the original historical cost out of our books. We recorded it as a debit. So to get rid of it, we have to do a credit of photocopier. So let's do this. And all of this, so I'm only going to write it once, occurred on the 31st of August. So our photocopier, to remove it from our books, is a credit of $32,000. Now, what's our debit here? What is our scorecard temporary account that works out all of this out? You've got a bit of a hint in this question because part C asks us to consider the ledger accounts. And we have a number of options: photocopier, accumulated depreciation, and this one called disposal of photocopier. This is our temporary account that works out our scorecard. And this is where all of every transaction in Happel is going to have one debit or credit to this account. So our debit here is disposal of photocopier. And it is also $32,000. We should do a narration here, and all we need to do is say transfer, because we are transferring it to our disposal, to transfer of cost of asset. And that's fine. We probably should also say that it is being sold. We then can say that we have ticked off the H. The next one is our accumulated depreciation, which is a credit. How do I get rid of a credit? I do a debit. So also on the 31st of August, and I'm going to do an abbreviation here, accumulated depreciation, how much our asset has gone down in value over the course of its life, accumulated depreciation of photocopier is also going to have a debit, in this case $14,000, so we're removing that from our books. What's the other side of this transaction? Our temporary account scorecard disposal of photocopier, also $14,000. And our narration here is also going to be a transfer of accumulated depreciation of asset sold. And I'm making a few abbreviations here just to make it a bit quicker, but essentially that's what it is. Also, this occurred on the 31st of August. I've ticked off the accumulated depreciation part of this. The proceeds is where the trade-in differs from cash. I haven't got any cash from the proceeds, but I did get $16,500 of essentially a discount on my new photocopier. So I've essentially, on the 31st of August, because of the trade-in, got part of the new photocopier that I am buying. I've got $16,500 of new photocopier because of the trade-in. I haven't got all the value of the asset because of this, and this comes later. Again, this also involves my scorecard disposal of photocopier. And if it's a little bit hard to read, that's okay. I'm going to show you the answers at the end. How are we going to call this? It's not a transfer. We're going to say this was the trade-in allowance for new photocopier. I have ticked off the proceeds. Then we come to the answer that we already know. But let's think about this. Did I make a profit or a loss? If I look at the disposal of photocopier one, I have $32,000 of debits, $14,000 of credits, plus $16,000 of credits. If I add these up, my credits are less than my debits. And this is a temporary account, so it must be closed off at the end with my debits equaling my credits. The only way I can do this is by doing a credit to disposal of photocopier. So let's do this. Disposal of photocopier. is $1,500 as a credit, and this must mean I have a $1,500 debit. And if we think about Paler, because Paler is always our friend, debits, credits, credits, debits, debits, credits, and I should have done this at the start. What is going to be a debit that increases that's a revenue or expense? Clearly, it's going to be an expense. And our expense here, due to the loss, you can see it's all starting to link on, is a loss on disposal of photocopier. And we've completed now the HAPL component. I've successfully recorded all of the components needed to remove the old photocopier. What would by narration here? It is a transfer of loss on disposal. I am recognizing that I have made a loss on the disposal of this new old photocopier. But at this stage, I need to think through that this is not completed. Because even though I got a transfer of a reduction of $16,500, I still need to pay $35,000 plus GST for the new, minus the $16,000. So that's going to be $35,000 plus $3,500 minus $16,500 is the total amount that I need to pay for the new photocopier, subtracting my trade-in allowance. And that is going to equal $22,000. So I now need to get a loan. I can't just pay that instantaneously. And you can see I get a loan here. So also on the 31st of August, I'm going to get a loan, which means my cash at bank is going to go up by $22,000 and my loan by Easy Finance is also going to go up by $22,000. And my narration is going to be loan to buy photocopier. And it's getting a bit messy here, and I hope you can read it. And again, I'll show you the answers. Have I successfully recorded my new photocopier? I haven't. I need to understand that ultimately, as depressing as it is, on the 31st of August, I don't get to keep that cash, and I have to buy the new photocopier. Let's do the bits that we know. My GST clearing, because I'm buying a photocopier, is going to reduce how much I owe in terms of GST, a debit. And all of this cash that I got as the loan, cash at bank, $22,000 is going to leave my building. And if I do the sums here, that means my photocopier is going to make sure my debits equal credits is going to be $18,500. Beg your pardon. And you're probably going, hold up. My photocopier was $35,000. Even if I say my narration before we go through this, payment for the balance of photocopier. So I've completed all my journal entries. We should hold up and go, hang on, didn't I buy a photocopier that was worth $35,000? Why did I say that my asset of photocopier has only gone up by $18,500? Yes, my debits equal my credits, but my photocopier is worth $35,000. Let's not forget on the 31st of August, we also recognize that I had a trade-in. Now, if I go $18,500 plus $16,500 I have 35,000 debits to my ledger account photocopier, which equals the value of my photocopier. So I've correctly recorded everything I need to do. So let's now think about C, and we're not going to do it, but we're going to look at the solutions. If we look at this on the left-hand side, you can see much more neatly what this general journal entries would look like. And I'm going to use that information to accurately record this in my general journals. I'm going to complete all the required information. I know in the photocopier, I historically had a balance, because this is an asset, and debits are on my right, correct debits on my left. Increases to my photocopiers are going to be debits, decreases are on my right. I originally previously had a balance of $32,000. So let's highlight as we go. $32,000 was my accurate recognition of my old photocopier. I'm then going to do a credit of $32,000, which I've recorded here. My cross-reference is the other side of the transaction, so disposal photocopier. Then, if I go through the rest of this, where else is photocopier? I'm going to do a debit of $16,500 and a debit of $18,500 here. And my relevant cross-references are going to be disposal of photocopier and cash at bank. And this then leads me to a balance of $35,000 because assets get balanced. My accumulated depreciation, my asset going down, so credits and debits. My original record of $14,000 was the ongoing reduction of my asset. On the 31st of August, as I run through this, I did my accumulated depreciation as a debit to retransfer this off my ledgers. And my cross-reference is, again, disposal of photocopier. And so on and so forth, we work through this. And the important one is my scorecard, my disposal of photocopier account. This is the one that I've done for every part of Happel. I did a debit here of $32,000 to transfer my historical cost. I've done $14,000 to remove the accumulated depreciation. I then recognised that I had a credit of $16,500 to recognise the proceeds from my trade-in. And the only way to balance this and close this off, because I need to transfer it, is to, as we mentioned before, do a credit, which means a expense. And that then, if we look at the loan and the new GST clearing impact, is how we complete our general ledgers. Hopefully you've followed that through. This is a good one to pause and really look at to develop your understanding of general ledgers, cross-references, and fixing up your balancing and closing entries. And guys, that is how you complete a relatively complicated disposal of non-current assets using a trade-in and the purchase of the new asset via a loan. Hopefully you understood and followed that, or were able to understand my messy writing, and now's the time to really practice to develop that skill.